Crude oil, daily forecast, February 18th, fxempire.com. The light sweet crude market, as you can see, fell pretty impressively during the Friday session. But what also should be impressed upon you is the fact that not only did it fall, but it stopped right where you would want to see it if you were a buyer, right at the 95 level. This level should be supportive, and it has been several times. And as a result, this almost looks more like consolidation. Really, it isn't until we break down below 95 that it becomes a bearish scenario. And there is so much noise below, it's difficult to see how much farther it would fall. We think 91 is a decent candidate, maybe 92. It looks like it could form a bit of a zone based upon these candles. If that's the case, we think that's just simply going to be a buying opportunity. The US dollar is being debased and devalued by the Federal Reserve, and that should continue to drive price of oil higher. Some type of supportive candle is what we need to see in order to start buying. And at the close of business on Monday, we'll take a look at possibly going long again. Looking at Brent, it's a little bit more positive scenario, at least technically speaking, as we fell during the session on Friday. But you can see we bounced pretty significantly from the 116 level in order to form a hammer that's pressing up against the 118 level itself. 118 looks to be relatively resistive, but a breakout above that level opens the door to 120 and probably almost immediately. It's a very supportive candle. And as such, we think that's the likeliest of outcomes. However, we need to see a break above 118 to take that seriously, and that has been one of our long term targets for some time now. So we're more than willing to take a quick profit at that point in time. However, that's not to say that the long term scenario doesn't show this market going much higher than 120, because we think that's very likely.